Hello, everyone, and welcome to the Auto Trading Live Strategy Session with Jeff Tompkins. This is your host, Richard Van Rich, and Craig Ward with us here in the chat. We're excited to have you guys with us here tonight. Got a lot of great information to go over. If this is your first time on one of our sessions, you'll notice your microphones are muted, so we can all hear Jeff and I talk. But there is a Q&A box at the bottom of your screen if you just move your cursor around. You can put any questions in there or also in the chat box. We'll get to those throughout the evening and also at the end before we sign off. If you do have to hop off, you get bumped, or you have to sign off for any reason, don't worry, this is recorded and will be available in the members area later tonight and also sometime on YouTube tomorrow. Let's see here. I want to make sure you guys can hear me and see my screen. So if you can, just pull up the chat box and put a 1 in there. We know that you can see my screen before I bring Jeff on. And if you have any questions about your own personal account with us, access to trade alerts, trade trends, Zillion, anything like that, email support@autostrading.com, and we'll get to those sometime tomorrow. Let me just read the disclaimer real quick. Auto Trading LLC and Trade Trend Zillion software is intended to be used as information server for subscribers. It includes opinion as to buying, selling, and holding various stocks and securities. However, the publishers of Auto Trading, Trade Trend Zillion software are not brokers or investment advisors and do not provide investment advice or recommendations directed to any particular subscriber or in view the particular circumstances of any particular person. Auto Trading LLC, including its owners, do not accept responsibility for any decisions made by subscribers using the software, and subscribers to Trade Trend / Zillion software. Any other persons who buy, sell, or hold securities should do so with caution to consult with a broker or investment advisor before doing so. All right, with that being said, I'm bringing over Jeff. Jeff, you there?
I am here. I'm somewhere. Can't see me, but I'm here.
There you are. There you are. Coming at us live from Hooters again.
Yeah, can't see me, but I'm somewhere. I'm in a bunk. I'm in a bunker.
You're in a bunker. It's
Yeah,
not good.
Yeah, just in case World War III comes.
What's going on in Boise?
Still got a lot of people moving here. Traffic's getting worse. Went out and ran some errands this afternoon, and took about twice as long as it did 5 years ago.
Yeah, great.
It's crazy. Starting to get cold. Winter is
coming. Temp up there.
It's like in the mid to high 50s. We drop. It's crazy. Like we get Indian summers here, so it's we'll get like 80-degree temps in October, but we had that a couple weeks ago, and then drops like 20 degrees over the course of a day or two. Pretty crazy.
Yeah.
It's fall though.
It's still warm here in Atlanta.
Yeah, you're in hot Atlanta, so you got the warm weather.
I got this beautiful tree in my front yard. It looks like from a postcard. So all week, like all the families will like just walk in my yard and sit down and like pose for pictures and everything else. And like this weekend, I was like, I'm just watching everybody taking pictures, and I'm like, if one more person takes a picture, I'm gonna have them just take a rake out there, at least like rake up some of the leaves out there. And just use my tree.
Yeah, I call it leaf-ageddon. We get I'm down by the water, so it's like trees everywhere, and oh my gosh, we have mature trees at our house, and it's we get like a foot to 2 feet of leaves covering the entire property. So it's pretty crazy. We sound a lot better than you did last week.
I know, man. It was brutal. I was sick. I'm still kind of stuffy, but I don't think I've been that sick in a long time. I was thinking like maybe I had COVID or something. It was just lasting. But
yeah, well,
feeling better now.
Well, good. And hey, thanks, Ed.
Yeah.
Ed said he signed in to show support for the sessions, but he has a scheduling conflict. Yeah, don't worry, Ed. If you have to drop off, we do record, and that will be posted up in the YouTube channel tomorrow. Daria says it was probably RSV. Yeah, there's like a big RSV outbreak. Actually, that's a good point. It could have been RSV because you got it from your daughter, and that tends to hit kids in like school, schools and things. So maybe that's what it was.
I was thinking of that. Our daughters, they had this giant carnival at our school, and both campuses came, and it was probably at least 2,000 people there, and all kids just rubbing cotton candy all over each other. Probably everybody got each other sick. Like half their class was out.
Yeah.
Craig says probably monkeypox.
Yeah,
Was it monkey?
At least you didn't get
Was
monkey. But I mean, there are theories that, you know, that a lot of these, what were previously, you know, less common respiratory viruses like RSV have, like, the incidence has gone way up because of, you know, the theory is that all the quarantining and stuff that was done during COVID, we've reduced the transmission of all these other respiratory viruses. So our immune systems, you know,
right.
have not been prepared for them for
Weaker,
a
I
couple
guess.
years. Yeah.
Yeah.
That's Craig said probably monkeypox. Yeah. We don't want to get monkeypox before Orlando. Yeah, guys, by the way, we're going to be, I know we have some Florida members that join our sessions every week, and we're going to be in Orlando starting Sunday, this coming Sunday, for the money show. So if you guys are planning on being there, stop by our booth. We have a booth in the exhibit hall, and also I'll be giving a couple talks during the money show, one on Sunday and one on Monday. So hope to see anybody that is planning on going there while we're in attendance. So it'd be great to meet you guys face to face. It's always fun to see our members face to face. That's the downside of the virtual sessions, is we don't get to actually see you guys, but you have to look at our ugly mugs. So all right. Well, anyway, let's get on with it. We've got a lot of good stuff to cover tonight. So we'll map out our key levels on the major indices. We've got something very interesting happening as it relates to the 36-month moving average on the S&P 500. So we're going to take a close look at that. We still got a little bit of time left in the month of October, but there could be some significant developments in the S&P 500. And then we'll follow up on the short strangle. Ooh, shoot, you know, I forgot to put that in. Give me 1 second, guys. Sit tight. I didn't get that into our slide deck here, so let me get that updated real quick. I was in the process of doing it. Do you want to sing a song, Richard, or tell a joke, or?
I don't know if I should
No
sing.
pressure.
I started seeing the participants dropping off like flies.
Yeah.
That's funny.
Tell a dad joke. I don't know.
There you go.
Let's see here.
So I guess I can talk to everybody out there. How many folks were trading at the end of the day when the market dropped like it did? Put in the chat box. Let's see if you guys can. Okay. Handful. Like I say, Microsoft earnings didn't go so well. I was watching for that drop like all afternoon. I was thinking it was going to happen around 2:30, and then sure enough, like I had to step away and pick my daughter up from school. And I checked trading view in traffic, and I was like, "Oh man, it dropped."
Yeah, I got quarterly earnings coming out that are impacting markets. Let's see. Does anyone know the date? What is the date of the next Fed meeting? I meant to look that up today. Desktop.
Let me check. My Forex factory calendar. Let's see.
While you're looking that up, I'll got that all set up now, so we'll keep going here. So yeah, we'll follow up on the short strangle here just in a second. We made an adjustment to that last week and then reestablished it further out in expiration. So it's all looking really nice. And then we're going to focus on looking for current opportunities and spend a little bit more time on ticker roundtable this week, since we've gotten pretty deep into where did my chat? We got pretty deep into the strategies in previous weeks. So we're going to spend more time on looking for current opportunities in the market as we're seeing this rebound. Right now, futures are actually not looking so hot. So we'll see what happens. But we are up against some pretty significant resistance, which we'll look at on our key levels here in momentarily. So we'll save more time for ticker roundtable tonight. So let's go ahead and jump over to our platform. Refresh to make sure we got current data. All right, so short term, we've seen the major indices rebound off kind of a double bottom pattern. SPY, Dow, the Qs, short-term trends are all up over the course of the last few days. Medium and long-term trends remain down. We've seen this, we pointed this out in the last week or two sessions, a shift in the buy to sell ratio for our algorithms where we've seen, and that's often can be a leading indicator of a market shift. So as in that most recent leg of the sell-off, we saw that shift from a higher percentage of sells to buys, and then it shifted way up. So I try to keep an eye on this to kind of give me a leading indication of potential market shifts, sentiment shifts. We're still in bearish territory, and risk remains relatively elevated. We'll take a look at the VIX as well. But right now we're in a bit of a rebound. So again, we are coming up into resistance, so we'll want to really pay close attention to that. But as of today's close, energy, communications, and materials were our top performing sectors. So let's go ahead and actually over the S&P. All right. Looks like Daria said November 2nd. So is that the date? Yeah, we have midterms November 8th. That's right. Yeah, and then Michael said November. Yeah, so November 2nd, I think, is our next Fed meeting. So, there, guys, probably, unless there's a surprise on the forecasted rate hike. I think there was that 2 weeks ago. It was either last week or the week before that we went over how to look for significant market impacting events, announcements, things that tend to move the market. I went over how to find those and interpret them. So that recording's on our YouTube. Was that last week? Yep.
Yeah, I think so.
So all blends together. All right, so S&P. So again, we've had, I guess, really kind of a triple bottom. And we did gap down, obviously, back on October 13th, and then rotated higher. That was around a Fed, that was CPI, I think, October 13th. So we've got very strong support now because we've rotated higher off this 3,600 level now several times. So it's our century mark, and then 3,500 makes our support zone. All right, so this is really significant for more than medium to long term if we can hold this support zone. So just in a matter of a couple weeks, we've bottomed around 3,500 on the S&P 500 and are now trading up, nearly 400 points higher, which is pretty significant, right? So let's talk about resistance, because we are coming up into some key areas of resistance on really all the major indices. So we're going to want to watch 38,900 this week. We're kind of at one right now, kind of more a half century market, 3850. So that's going to be more relevant, for tomorrow. And I'll show you kind of where I'm spotting these levels of the price action around them. And then for the 3,900 level, we've really got a lot of previous support that was broken. So this is our resistance zone, about a 50-point resistance zone on the S&P that is now in play as of today. So what does this mean for us? Well, we've got a potential range zone here between about 3,600 and 3,850. So if this resistance zone holds and we rotate lower, then, and we are still in a red divergence cloud here, you can see, although it's starting to kind of lighten up, this could be our trading zone for the near term. And if we do sell off from this zone, I think now this support zone down at 3,500 to 3,600 is so strong that it has the potential to hold, barring some major unforeseen event that would really cause a market crash. So we could see a retest again and then a move higher, and we'll probably know as early as this week, before the week's over, whether this resistance zone holds and we rotate back down into the lower end of the channel, or if we can break out, then we've got quite a bit of room to run. We're definitely looking at, want really watch millennial marks very closely. So that 4,000 level would be a potential stalling point if we break through this resistance zone. But true technical resistance is really closer up to 4,100. So if we do, if we're able to break through, that's roughly where we got up to back. Hard to believe. I mean, it wasn't that long ago. It's just, a month and a half ago. But back in September, we were up around that 4,100 level before we had this next significant leg lower and retested lows from mid-June. So this could be a potential stalling point if we break through the resistance zone and break through 4,000. And these are, going to be very significant areas of resistance going into the end of the year if we can get back up here. And they're pretty much all at millennial marks: 4,300, 4,200, 4,100, century marks. But I might have said millennial, century marks, and then we got the millennial mark at 4,000, century mark 3,900. So it's a kind of an easy way to do that is just really keep a close eye on these century marks around the double zeros, because you'll notice, and even if you go way further back in time, we see all this support and resistance around these century marks. So so that's what we're keeping an eye on. Let's go ahead and jump over to, actually, while we're on the S&P, let's go over to the monthly chart, because this is significant and I want to point it out, mainly to keep an eye on through the end of October. All right, so this is kind of unusual. We're really vacillating between closes above and below the 36-month moving average on the S&P. So we've got, a test and even trading below the 36-month moving average on, this is a monthly chart, so each candle represents a month. And test rotation higher, then we get a close below after the test. We had 3 months of consecutive closes back above the 36-month moving average. And then last month, September, we get this really big bearish candle to close back below. But so far in October, we've managed to break through, and we talked about this as a significant resistance zone right around 3,800, which coincides with roughly the price of the 36-month moving average, which is as of today, 3814.79. But right now we're trading above. So if we can close above the 36-month moving average at the end of October, that's a good sign. That's going to make a stronger case for more of a market rebound into the end of 2022. Again, not going to get back up to the previous all-time highs, but get close. Donna, we use a 36-month moving average. It's a closely followed metric by large institutions, hedge funds, etc. We actually did a session on it sometime back, so it's in our YouTube channel. You can take a look at that and kind of all the rationale behind it. But it's the period that we use for the moving average 36 on a monthly chart is for the purposes of mean reversion while we're within secular bull markets, and also when we get into bear markets and we have mean reversion or sell-offs into that average or below, it's often a major turning point after these market sell-offs or bear markets. So if you look back at past test of the average on the major indices, we often see this is a very good mean. So the 36 period really coincides with average lengths of secular bear markets. So that's why we use the 36 period. So we'll keep an eye on this because it's right now just applies to the S&P. So if we look at the NASDAQ, we're still trading relatively far below the 36-month moving average, even the Russell. Okay, we haven't made it back up there, but that's a good sign that the S&P, because if we can close above on the S&P, the other indices may follow suit. So let's go back over and take a look at the Qs, the NASDAQ 100 ETF. Okay, so similar picture. We've got currently testing a major resistance level right around 284 on the NASDAQ 100 ETF, the Qs. So again, we'll know this week if this is going to continue to hold as resistance. We've got all kinds of support and resistance in this consolidation in June and July. So we want to exercise caution on any long expectations of moves to the upside. We could see this whole, and I'm looking at the futures right now. They've pretty much wiped out what the market gained today already. Let's see. And NASDAQ futures are trading at 11,459. So we want to be cautious tomorrow. We might see this resistance level hold. Okay. And if it does, we're looking at a rotation lower about 270. We'll look for support around there if we rotate lower. If we break through, that's going to take a shift in the overnight futures because right now, again, they're not looking so hot. But if we break through, we've got some significant room to run here. Oops. So we want to be watching right around 295 for our next level of resistance. Okay, so those are the ones to watch for the near term through this week and the rest of October. Okay, so let's clear that out. So now let's look at the VIX, because the VIX gives us a lot of information, right? It can forecast these market shifts when we're at major levels of support or resistance on the NASDAQ and S&P. So this is where we look for similar levels of support and resistance, but being that they're inversely correlated, if we see the S&P hitting a resistance level like we are today, at the close, then we're looking for the VIX to be hitting a support level and for that level to hold. So we just, it's kind of, you know, works in opposite fashion. And we tend to see the 28 level on the VIX serve as support and resistance. We also tend to see like the 34, and again, in past weekly sessions, we've really talked a lot about this 34 to 39 resistance zone on the VIX. The VIX does not spend very much time in this 34 to 39 zone. So like, and so you can see what a great tool it is for forecasting market trends and shifts in the major indices, because we looked at this in prior week sessions before the S&P actually rebounded and went, you know, moved up from where it has over the last couple of weeks. So whenever you see the VIX come into this 34 to 39 zone, and particularly if you see the S&P or the NASDAQ holding support, and you know, using the other strategies like the price action pivots that we covered recently, and then the trade trend indicators that we're going to look at, signals that we're going to look at tonight, those can all be great confluencing factors that tell us, hey, there's a lot of you know, potential for a market move. And so the market move for the major indices like the S&P and the NASDAQ would be up when we see the VIX moving up into this 34 to 39 zone and then retreating. And if we see the VIX base at a support level and start to move back up while the S&P and NASDAQ are hitting resistance, then we expect there to be some degree of sustained move to the downside. Okay, so we're at some very key levels right now on the VIX and on the major indices. Okay, so very important to watch all this for tomorrow because they're all in play right now. So this is support right around 28 on the VIX. And this is our resistance zone that we've retreated from during the most recent market rebound. So as I was starting to say, the VIX spends very little time at these levels, but it obviously, it's particularly this year, far more than usual, has touched these levels or traded within these zones. But see how when it does come up into the 34 to 39 zone, it spends very little time there, even intraday, right? Even intraday, it may not even close within that level, right? No close. So far on this one on the left, these two, this one, it actually opened in that level and then retreated lower intraday. This candle. So we only had 1, 2, this one, 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 that one. We've only had 2 candles actually close in this 34 to 39 zone this year. All the other ones either opened it and then retreated lower intraday or just spiked up, you know, opened below that zone and then spiked up and then reversed back lower again. So again, the VIX spends very little time in the zone. When you see the VIX do that, it's a very good indicator of the broader markets moving back to the upside. But for now, that's already occurred, right? We already have talked about that in past weekly sessions. So now we're keeping an eye on support because we just came down into this 28 support level. And again, the VIX doesn't spend a lot of time there. So if you look back, you see, you know, these spikes up into that level, and you tend to see a lot of, you know, rejection of this level, whether it's coming up from the downside or coming down from the upside. So how do we tie this all together? Well, as we just looked at on the S&P and the NASDAQ, we hit resistance levels, right? And since the VIX is inversely correlated, it goes down when the markets move up, or it goes up when the markets move down. We want to look for the VIX hitting a support level. Well, it's at that support level right now at 28. Didn't quite hit it today. The low today was 28.22. So just above it. Again, we're using these as kind of a framework, but not an exact number. And so what we're looking for tomorrow is the VIX going to reject this 28 support level and move up? Because if it does, then we're going to see, assuming this 28 level holds a support on the VIX, we're going to see the S&P and the NASDAQ move down. So this is giving us forewarning here. Even, yesterday when we closed up closer to like 29, let's just like 29.75, we were moving down into a support level. So it makes a whole lot of sense that as we're rotating lower into VIX support, we're rotating higher into S&P resistance. And now we're at that critical area, it's a potential, right way to call it. It's kind of like an inflection point, potential inflection point where we could see a major turn in the markets in the near term. Okay, so I'll pause there. We've gone through our key levels on the major indices and the VIX and reviewed the 36-month moving average. Richard, any questions on what we talked about so far?
No, it looks like everybody's pretty good with it.
Okay, cool. Good. And then again, in one of our past sessions, we covered the short strangle strategy. So we've been putting on weekly strangle trades on the SPX, just simulated trades. We're not putting them on with real money, just to demonstrate the strategy. So we closed out the one that we initially put on for a nice profit and reestablished a new short strangle. I think it was last week, could have been 2 weeks ago. Again, losing track of the weeks here, but so we've already, if you didn't attend that weekly session on how to set this up and all the criteria, again, that's available on our YouTube channel. But the exit criteria is at 50% or greater profit, or profit target of the initial entry price. So the trade price on the 3,300 puts was 21.10. So we want to be looking to get out around 10, 10.50 or less. So these are now already trading down at 665, which would be on one contract an open profit of 14.45. And the calls, since we're moving up in these can be closed now, but since we're rotating higher on the S&P over the last couple of weeks, the calls have a floating loss of 32.80, but we're still quite a ways, like as we just looked at on the S&P chart, quite a ways from 4,000, and it looks like we're bumping up into resistance and may potentially rotate lower from that level. So these are still would still be kept open, in which case we can reestablish a new short put, and we would do that right around the 10 delta. Oops. So let's go ahead and just reestablish it now. So we're getting close to our 3-week prior to expiration, either closing or rolling adjustment. We may actually, if we get a rotation lower on the S&P tomorrow, these could actually turn a profit pretty quickly tomorrow if we get a rotation lower. So potentially we could close these out tomorrow, because within about 3 days, so by the end of this week, we're either going to want to close these 4,000 calls with a profit or roll them out to the next expiration. So since remember, we don't want to hold this short strangle within 3 weeks to expiration. So we would roll these 4,000 calls out. Since we're only a few days from the point of needing to roll these, if we do have to roll them, we may not have to. In fact, I'm guessing we probably won't. We won't open the new short put at the same expiration, which is November 18th. We'll go further out. So I can actually just go over to the platform here real quick and reestablish that. So let's put it in. And let's look again just real quick at our support. All right, so again, our support zone is 3,500 to 3,600. Let's see how that coincides to our deltas. We'll just go out to, let's go out to the December. Those are 52 days till expiration, December 16th. So I need to get over, I'm on the IWM, I need the SPX. Okay, so we're gonna go to like right around a 10 to 12 delta. Oh yeah, so these are far below our support zone. So I might go a little bit higher in the delta. Just want to get below like 3,500. I might even go with the 3,400s. So there are 13 delta. Generally want to be about a 10 to 12 delta. We can go a little bit higher. This is still 100 points below our 35 to 3,600 support zone, which is a strong support area of support. So we can go ahead and we'll just stick with one contract for the simulated trade. We'll go ahead and enter that for tomorrow. And reestablish the short put. And then we'll follow up with that one as well. Okay, any other questions, Richard?
Yeah, so with that, is there any reason why you would do SPX over SPY? Because SPY is usually cheaper.
Yeah, so again, we're just doing this for as a hypothetical, like simulated trade example. You know, setting up a strangle in the SPX would require, even with one contract, quite a large account and hold a lot of margin. So an alternative, this is again all simulated trading, so not obviously a recommendation to place these trades in your own account. That would be obviously at your discretion and based on your available capital, et cetera. But an alternative would be to use the SPY, right? Because it's a tenth the size of the SPX, so setting up a short strangle on the SPY would require much less margin. So like if we set up that same short put on the SPY, let's see. And we just did one contract. So it would withhold about $3,500 in margin. That's going to be a lot higher on the SPX, right? Because obviously the dollar amount that's trading there. One thing we're going to look at though is hedging these short strangles on a future session. So we can actually set up little hedges within the short strangle that can reduce margin. So we'll cover that in a future session. But there's some ways we can actually reduce margin if you do want to trade them on the SPX. But yeah, the SPY would be a nice alternative to the SPX.
Cool.
All right, so tonight I want to look at some current signals. We've mapped out our key levels. We've kind of determined what the VIX is telling us as it relates to the S&P and the NASDAQ. Right now, we've got energy, communications, materials that are performing well. Let's actually take a look at the XLE, which is the Spider energy ETF. So we just recently broke through some major resistance. Redraw that a little lower. It's kind of more around 85. All right, so this might be, an opportunity. We might also be a little late to the game. Want to wait for a pullback. We've had some nice buy signals. There's actually currently an open one on the XLE, again, which is the ETF that tracks the energy sector. We had a really nice one down here as well. And this is actually a great one to highlight, because if we zoom in a bit here, right? So we see quite a bit of support down in this 68 to 70 zone. We get a buy signal, and then we just recently in a weekly session, and then on our workshop last week, we have some of our workshop members from last week that we held that covered the price action pivots. So we see that we have a bullish price action pivot here, and then a trade trend buy signal, and then we get a follow through on the up move. So this buy signal, which would have triggered right about there, so right around 73. With the trailing stop, it's taken out just below 80 bucks. Picked up almost $7 per share, which on a $73 stock at the time, it's a huge percentage move in just 5 or 6 days. And then we got another one. So there's currently an open signal on the XLE. We are trading a bit off the current trailing stop level. And that's all. That trailing stop also closely coincides with that support level we just drew. So if you look at the prior resistance areas that were tested by the XLE, and then we saw rotations lower, we've broken through that. We've now had 3 days of bullish closes above this what's now a support level, prior resistance. And so there could be some opportunities here. We could see a bit of a pullback in the near term, and then a retest of that support and a resumption of the uptrend. So right now, energy, and it has, predominantly done well this year. We've had a lot of volatility in the energy sector, but and it has had a big run up since late September. So we want to be a little bit cautious, right? But it might be there might be some opportunities there. So I just went ahead and clicked on the energy sector under our sector performance metric, because it's going to automatically populate all of the energy stocks we have loaded into the Zillion platform. And it gives us an opportunity to look for buy signals. Are there any pending buy signals that we might be able to take advantage of? So let's sort through this. Let's see if we have any pending. So we don't currently have any pending. We have some entries. Filter on. Let's also look for bullish divergence. We've got one on FANG, Diamondback Energy Inc. Let's take a look at that one. So this one's not far off the entry, which we can go back and verify the entry price was at 153. So it's trading 36 points above, 36 ticks above the suggested entry. So currently our stop level is right down here, around 146 and change. So a little bit of consolidation on FANG. Its major level of support now resides around 147.50. And then we've got a resistance zone up here around 160 to 162.50 to keep an eye out for. So there's a good chance of a retest on this current buy signal if this support level holds. So what I look for in these types of opportunities, I typically don't like taking signals after a major run up in the direction of the run up. So we had a run up to the upside, and this buy signal down here would have been very nice because it was at support after a rotation lower. So this one may not have as much room. But if I see, so I don't want to buy here. I'd want to wait for a retest of support. And then if we get rotation higher off of that, that might be an opportunity. Looking for, profit targets up around the 160 level. And then we've got a really nice price action pivot here. So this would have been a good opportunity to take advantage of this price action pivot. And it was right at the breakout. So there's our pivot candle. So candle 5 high is right here, right? And there was the breakout. So see, using both the trade trend signals and other strategies like price action pivots, the divergence cloud, we're in a green divergence cloud at the moment, provide the confluence that I'm looking for these types of opportunities. So that's one within the energy sector. Let's see if there's any others we can take a look at. Let's take a look at Apache. Okay, so we had a buy signal on October 21st. So last week, the white diamond here below the October 21st daily candle gave us the buy signal with a suggested entry at 43.41. All right, so that was triggered yesterday on Monday, right? It's right there around 43.41. Also had a bullish price action pivot there. So I'm seeing, confluence between price action pivots. And then as of today, we're at very strong resistance on this one. So if it can break through this resistance around 43.20, or sorry, 45.20, this one I would really like because we've got over 5 points to the upside before we encounter resistance. So if we can, we've got 2 resistance levels in play. So this is resistance 1, which we've pretty much closed right at today. And then we've got resistance 2. But a lot of room there if we can get through this resistance level. So I'd be watching on this particular one, watching a sustained breakout from roughly 45.20. Want to get above the high of today's candle, make sure we don't close back below 45.20. And if that can break out, an aggressive entry would be on the breakout. A more conservative entry would be waiting for a retest, which happens more often than not. A high percentage of the time when you break through a resistance level, and it's in that level ends up holding and becomes support, you'll see a retest of that level. And so and that's again more of the conservative way to wait and make sure that that's going to become, transition from a resistance to a support and actually become a valid support level. And if it does, so again, the step process there is wait for the breakout is step 1, wait for the retest, step 2, and then step 3 is to wait for the rotation higher, the resumption of the uptrend. That's step 3. So if you be patient and wait for those 3 things to occur, you have a much higher probability trade opportunity. And this one's got quite a bit of room to run on Apache if it can break through this 45.20 resistance, hold it as support, and then start rotating higher. And then this buy signal will also look very good, I believe. So a couple of opportunities in the energy sector there, pending confirmation of those variables that we mentioned. Let's see if I spot any others. And you'll notice that the numbers inside of the forecasted arrow. So if it's an up green arrow, the forecasted direction is up, tells you how many days ago the signal occurred. So right now there aren't any current pending signals, but it's still worth looking through some of these, even if they're 2 or 3 days past. Because number one, it's still an open signal, meaning that it's that trade alert is probably, or trade signal is already in profitability, but sometimes it might not be by much, and it's might still be worth moving on. Or again, in the case of a resistance breakout, it may be a good opportunity to have it on the radar, maybe add it to my watch list, and then wait for it to pull back into support. And again, those 3 steps: breakout, close above, retest of support, and then step 3, rotation back higher. Very high probability setup on those types of situations. So, that's our top performing sector. We, obviously that's just energy. Let's see how many opportunities we have in communications. Roughly the same, got 23. So materials.
Hey Jeff, for these sectors, are those by week or by month in terms of performance?
Well, it's as of the close each day, so they're updated every day. And you can look at the criteria. So basically, a 0 to 1 is mildly overperforming, 1 to 4 is moderately, and 4 to 10 is strongly. But it's updated daily. So tomorrow these could change. So we're just based on the close today.
Gotcha. A couple questions about it.
Yeah, if you guys have questions about any of the gauges within the dashboard, there's a little information thing there. If you need more like a more detailed explanation, I would suggest shooting us an email, because if it's related to like the algorithm or any like specifics within the algorithm, we'd have to forward that question on to our developers, and they can provide a more detailed answer on some of those things. But anyway, so there are some opportunities within the top performing sectors. One other thing I like to look at is, let's just go ahead and select everything within the database. So we have almost 6,000 symbols in our database. One thing I like to look at is filtering by profit factor. So a profit factor basically tells us historically, if you took every buy and sell signal from trade trend, the white diamonds and the buy and sell arrows, the historical profitability of every single signal. And a profit factor of 1 or greater is really good. It means that it's profitable. When you start seeing these like in 2, like let's actually take a look at this one. Oh, there's actually one down here that has, this is an extremely high profit factor, 4.26. So I always check the profit factor, because at a glance it tells me how well do the signals work on that asset. No system or indicator works equally well across all assets. It is largely based on the behavior of the asset, how it trades, etc. So another thing I look at is the profit factor. Does it have a profit factor greater than 1? How much greater than 1? You can see on this one, Aero Clean Technologies has a very high profit factor, 4.26. That's extremely high. In fact, if we look at the statistics, this is, oh wow, and interestingly, Fridays are a great day for Aero Clean Technologies, which is a name I'm not familiar with, but you can see that over the course of 16 trade signals, 7 were winning, 9 are losing. So it had a slightly lower than 50% win rate, actually 43.75, but the winning trades far outpaced the losing trades. And you can see that, I believe this is based on 100 shares on all 16 signals. $47,040 in profit. So that's an interesting one, pretty extreme. Let's look at Altisource asset has also caught my eye here. Interesting as well. Wednesdays seem to really favor this stock. So the signals that come in on Wednesdays, which is tomorrow. Do we have a signal on it right now? Let's see. We don't. So there's not currently a signal. The Wednesday signals tend to do really well for some reason. This one has a winning ratio of 60%. So out of 5 trades, 3 won, 2 lost. Let's take a look at the chart. Okay, yeah, so there's a buy signal. Hasn't triggered yet. Is that? Oh, no, it's showing no signal. Oh, we're past the number of days. This looks like this is a very thinly traded stock. There's no liquidity in this thing, only slightly more than 1,600 average shares per day. So I'd stay away from that one. Medical marijuana. There you go, guys. That's only trading at a penny. So we want to stay away from that one. One other thing I'll do, so profit factor, and then we can also look at corresponding green divergence cloud with green signals. The live cattle futures have already been on a tear from this recent buy signal. See how this says it has a plus because it's already, once it's gone over 10 days, this open signal has still been there from October 4th, and it's still running. But that was a really nice buy signal. Also nice bullish price action pivot. Let's see what I was going to look at. Icon Enterprises. So it has a green divergence cloud. This one's already in profit on the most recent buy signal as well. But green divergence cloud buy signal came in October 19th and has moved up. So the entry would have been at 53.89, and today it closed at 54.28. And it's moving up into, it's got some room to go. Doesn't make very large point moves, but percentage moves aren't too bad there. But probably going to encounter some significant resistance around 55. So those are some of the other metrics I scan on, looking for a green clouds and trade trend buy signals. So a buy signal with a green cloud or a sell signal with a red cloud, but also buy signals with no cloud is fine, or sell signals with no cloud. And then I like to see, assets that do well and have a high profit factor, historically speaking. So I'm looking for a profit factor of 1 or greater. And obviously there's a ton of them you can go through. We have 347 entries just with this one scan that have over a 1.5 profit factor. Over a 1.5 is a very good profit factor. But really anything over 1, you can kind of set that. Our scan actually lets you go even to 2 and above. So we have 89 symbols on our database that have a profit factor that's 2 or greater. So that's really good performance. Let's see if I can find anything else that looks interesting here. Canadian Natural Resources just recently had a signal. Oh, this one's kind of interesting too. So we broke through resistance on this buy signal. Okay, well, not currently in a cloud, but that's fine. But see all this support and resistance around this kind of fit right around 59. We get the buy warning, the trigger yesterday, Monday. So the buy warning signal came in on Friday. Yesterday it came up and hit the trigger. So it's not trading too far above the suggested entry, but we broke out. So again, might be a little more conservative and see if we get a pullback into this support, because this resistance level is now turned into support. and could create a nice entry opportunity for a rotation continuation higher. I'd be looking for resistance kind of right around 63 roughly or so. So those are a few interesting opportunities from and kind of what I'm looking for in my scans when I search for opportunities on a daily basis. So any other questions, Richard? And maybe we can take a few suggestions for the ticker roundtable.
Well, let's see. I was kind of writing a long answer, but maybe since we're in the teaching mode, you can do this. The Linear is new. They just started, and they were at our workshop last week. And their question is, I started yesterday and trying to figure out how to learn the essentials of using the platform. Do I start with a profit factor after I get a buy or sell indicator? And then maybe just quickly touch on the numbers and the arrows.
I would, I think probably it's best to start with the buy or the sell signal. So we've designed the dashboard to kind of in a format that flows easily. So I kind of, look at it as, let me see, I can actually draw it on here for you so you can kind of visualize it. So starting up at the top, so we, want to kind of start up here and then down. So that's kind of the process flow. And then within the scanner, we want to use the information, obviously, from the market sentiment, the sector performance, what asset we want to trade. So I would start with sorting by the asset class. And then next I would look at buy and sell signals. And then next, divergence cloud. Do they coincide? Is there a buy signal in a red divergence cloud? Maybe I want to avoid that. Or, vice versa, is there a sell in a green cloud? So I would probably look at profit factor last. If you find a buy opportunity, like here was one that just occurred yesterday on Accolade, right? Okay, there's not a green cloud, but that's okay. We got a buy signal. This has a really good profit factor, 2.37. So I'd probably use that as a kind of a final confirming metric. Maybe look at the statistics. Oops, I didn't actually click on that one. If I click on Accolade, all right, look at the statistics. How is it done? Maybe what days of the week when the signals come in, or do they tend to do better? How many signals is it generated? In this case, 41, with 23 winners, 18 losers, 56% win rate, and again, high profit factor. The short trades actually, so we break these down by long and short, so I'd also look at that. So actually, interestingly, on Accolade, the short trades far outpaced the long trades. So the sell signals, out of the $16,000 of profit on these signals, 11,000 of it came for 11,400 and change came from the short side, 4,600 from the long side. So then I look at, that's the next step, is I look at the statistics. So this is a buy signal. The sell signals seem to do a little bit better. And actually, the stock is in a kind of on a rotation lower. We're on a leg lower right now. So maybe I want to wait for a sell signal and not take this buy signal. So those are that's kind of the process, in the order of how I analyze that.
All right. Look at a ticker that one came in the box.
Okay.
ASAN.
All right. This is Asana Inc. Oh, beautiful buy signal here yesterday. So, so here's our buy from yesterday. Traded up into the entry today. Stock went up over 11% today. And why I really like this one is it is right off major support. I really like this one. This is actually also a bullish price action pivot. But you can see all the support here. And what I'm looking for with the support is in previous encounters with this level, how far did the stock move up off of it? Well, here it moved up way, you know, that's over a 50% gain on this September move. Again, here's another buy signal right off the support level. Again, huge move up, roughly equivalent to the one from back in early September. So we're seeing that kind of play out again. Also, I believe we have a valid bullish price action pivot setting up here. So the trade trend signal came in a bit earlier than the price action pivot. But that's okay. Like if you want to plan your trade around the price action pivot, we have the comfort knowing that there was a trade trend buy signal and a trigger today. But let's see here. We've got, I need to see what the low is on this one because they're pretty close. So the low is 1845, 1844. Yes. So it's not an inside candle. All right. So we got our candle 1, our candle 2, our pivot candle. Right. So we've got 2 lows that are higher than this pivot candle low. Then yesterday we get the higher low to the right of the pivot. That time yesterday, at the close of the markets yesterday, this was a potential pivot, which now today became a confirmed pivot because we got so this is candle 4. We got our next higher low, candle 5, which created a bullish price action pivot. So using the trade trend signal, we would have been able to get in down here around 20 bucks. If we traded this off the price action pivot, we'd be looking to get in somewhere up in this level. But seeing that historically the stock has tend to run pretty significantly off of that, it could be played with just the price action pivot as well. It's one that I would consider for a price action pivot potentially. If I were taking this trade, we want to just keep an eye on our levels of overhead resistance. So these are kind of the key resistance levels. I'm just spotting. There may be some other ones embedded in there, but these are the major ones that I'm just spotting at first glance. 1, 2, 3. So the trade trend buy entry, we'll look at the exact price when I get off the chart here, but would have been, looks like right around 20. The price action pivot entry would be if we break through the high from today, which was at 2187. So I'd probably, if I were going to take a long trade off of this signal really the price action pivot setup, to get in somewhere above 22, like maybe 2205 to 2207 to get follow through. So yeah, that was a good one to look at, both the trade trend signal and a confirmed price action pivot. Entry was actually at 1994 there. So that's a good one. Let's take maybe a couple more.
Dennis asked for REGN.
Okay, Regeneron?
Yes.
Right.
Pharmaceutical, I think.
Yep. Great company. Really a great company. Expensive stock. It's trading at 747.33. Yeah, we got to buy trade trend buy signal on Regeneron today. Let's see here. Doesn't look like currently in a cloud. I want to verify that, but so strong support at 700. So that's a key support level I would watch. And this was actually also a price action pivot setup right off this support level. So these are the positives I'm going through. Every trade opportunity has positives and negatives. So you kind of want to walk through all of those and then weigh them, before you make a trading decision. So I like, the strong century mark support at 700. And then we've got a bullish price action pivot Right, so we're making a series of lower lows, and then all of a sudden, yesterday, something changed. We make a higher low. So here's candle 1, there's candle 2, here's our potential pivot. Okay, and then today we have a confirmed bullish price action pivot. And the high of the highest candle in the pattern is candle 5 from today. So this is where the negative comes in on Regeneron. We're bumping up against some pretty strong resistance. I'm actually going to draw because we closed today just below 750. That's a half century mark. So I'm going to make this kind of more of a zone between 750 and 760. All right, so that's what I'd be concerned about with Regeneron, is that if you look at previous encounters with this resistance level, we've sold off every time. So that'd be my concern here. So I'd be watching this resistance zone for rejection and rotation lower. But if we can break through 760, let's see what the exact high of this candle was. 761.05. We can break through, then I would feel more confident in this setup.
Okay.
Let's take one more.
Yeah. How about SLB?
Silver. V is in Victor.
Yes.
Or,
B is in boy.
Okay, Schlumberger. Yep. Oh, oh boy. What a great signal. So this thing has been running on a buy signal from back on September 30th, so almost a month. And boy, has it taken off. So this was a great buy signal, also a great bullish price action pivot, which occurred right here. Candle 1, candle 2, there's our pivot. Candle 3, candle 4. This is a bit of a lopsided bullish price action pivot. I probably wouldn't want to use the candle 1 as the high entry. I'd probably want to use candle 5. And particularly, I would use candle 5 because also we got a trade trend buy right there. And then this one is really taken off. So from about 37 up to 52 on that one. And we even broke this bearish price action pivot around 50 from back in start of June, broke through that. So again, on this one, it's already made such a big run. It still does have an open trade trend signal on it with a trailing stop right around 49.50. That's the horizontal red line there. So because it did break through this resistance, I mean, this one's at higher risk now of a pullback. I mean, it's gone parabolic basically to the upside since earlier in October. So right now, you know, it would be too late to the game. I think it's already made too much of a run. So it would be more of like a monitoring opportunity or a counter trend trade, you know, maybe look for a bearish price action pivot, but we're going to have strong support at 50. So that was resistance. Now this is our support level right at 50. So if we can come down and hit support and it holds, and then we rotate higher, then it might have more room to run. Let's actually zoom out here and see if there's any other major resistance. And this stock has just really just exploded. Great company. So I'm going way back here and up so resistance, you know, previously was around 60 to 62. And, you know, that was back in 2018. So 4 years ago. So this has the potential, I think, to get back up to highs from about 4 years ago. but it's just recently made a huge parabolic run up. So probably want to wait for a pullback into support and then look for that support level to hold. It was that 1, 2, 3 strategy we just kind of went over, and then a rotation back higher up into the previous highs from 4 years ago. So those are all great ones to look at. Thanks, guys. Great suggestions. And if we didn't get to yours, I apologize. We can take a look next week for sure. Any final questions to wrap up the night? Thanks for all your participation, guys, and wanted to do some kind of demoing and thought process behind scanning and looking for opportunities. Since opportunities really abound in the markets, we're just getting a lot of volatility, a lot of directional movement. Key takeaway for tonight, guys, for tomorrow and through the rest of the week is really watch for rotations lower from the resistance levels that we're currently at on the S&P and the NASDAQ, and also the VIX. Watch that 28 level in the VIX. If you see it if you see it, that support level on the VIX hold tomorrow, and then the VIX close higher, then definitely exercise caution through the rest of the week on Thursday and Friday. Because my expectation would be if that does occur tomorrow, we're going to see a bit of a retracement from the recent run up in the markets.
All right. So just remind everybody next week, the Orlando. So likely we're not going to do a session next week.
Yeah, we'll be in Orlando next week, guys. And I'm actually going to be traveling for a bit in the next week or two. So we'll keep you posted on we definitely won't be holding one next Tuesday. Potentially we may hold it on Wednesday or Thursday, but we'll keep you guys updated on that as it gets a little bit closer. And then that following Tuesday, we won't be holding a session. So we'll reschedule that one probably for later in the week as well. So for the next 2 weeks, we'll keep you updated. They might be not on their normal days and times. So just due to our travel and things. So thanks all of you. Thanks for all the nice comments. And if you guys do have any questions, there's our email. You can email us support@altostrading.com. If you're not a Zillion member, you can check that out, altostrading.com/Zillion-masterclass, and check out our presentation. I hope to see you guys all very soon. If you guys are going to Orlando, please stop by our booth. We're just right in front of the main entrance as you walk in the exhibit hall, and hopefully you can attend our presentations. So have a great rest of the trading week, guys. I hope you do well, and we'll see you next week, or we'll see you in a couple weeks.